All right, good morning, everybody. Hope you're all having a good day. So let's take a look at the S&P, right? The SPY is the ETF that tracks the S&P 500. And if you go through the sectors, it can give you really good insight into what the broader market is going to do or what SPY is going to do. SPY is basically the sum of its parts. There's 11 different sectors, and different ones are in the driver's seat at different times. So let's just first take a look over here at SPY, which is really not doing much today. This action is actually kind of healthy because we got overbought and now we're kind of consolidating. Instead of going up and just kind of springing right back, we've been kind of going sideways. So that's kind of good. Now, the biggest sector in the market is technology. And notice how the technology sector, this is the ETF XLK that tracks technology, hit resistance at basically the exact same price that it did back here. Markets tend to hit resistance at former peaks, and this is because of buyer's remorse. There's people who bought back here who have been underwater ever since. And now that it's finally back to their price and they can get out at break even, they're placing sell orders. So remorseful buyers from here placing sell orders here has formed resistance at the same level that was a peak before. There's an old saying on Wall Street, sell at former peaks. And this is why. It's not just a wives' tale. And a lot of wives' tales there is actually based on truth, right? All right. Next up, we want to look at the healthcare sector. And this ran into resistance at this level. And this is a different form of buyer's remorse, or a different manifestation, I should say. People buy here, and then when the support finally breaks, a lot of the people that bought say, this sucks. If I can get out at break even, I'm going to. So when it gets back to the level that was support, they place sell orders. And if there's enough of them, the support level converts into resistance. This is kind of interesting, though, here, because it looks like this support down here might be getting broken. Support's a large concentration of buyers. And when the support breaks, that's just trader talk for saying, like, oh, it gets below the support. It means that the people that created the support with their buy orders are out of the market. They finished or they canceled. But regardless, when you take a lot of demand out of a market, it sets the stage for a move lower, because when the supply, meaning the sellers, come into the market, they're going to have a hard time finding buyers. So they got to force the price lower. So this is going to be something that's kind of interesting to keep an eye on over the next few days. All right, the financials have really kind of mostly been in the driver's seat over the last few days. They gapped up. Now we're kind of going sideways. All right. So not really much going on there. The consumer discretionary sector. Yeah, this is another example of something kind of running into resistance at a former resistance level. I mean, it's not precise, but this is from 3 years ago, and we got within a couple dollars of it. So a big part of this sector is Tesla. Let's see what Tesla's been doing here. Yeah, so Tesla's starting to kind of reverse here. Not surprising. Markets don't just go up, they go down too. There is something called profit takings. So this is an interesting kind of a gap lesson, though, here, right? And I got to write that down. Gap lesson. There tends to be really aggressive buying at two places: the beginning of a trend and the end of the trend. And if you gap, meaning you close at one price and open at a very different price higher, a gap up, this is what we would call a breakaway gap. So this is the aggressive buying at the beginning of the trend. Up here, this could be what we call the exhaustion gap. These are the people who have been watching and watching and waiting to get a better price. And finally, they get sick of waiting and watching, and they say, I'm going to go buy this thing regardless of the price. So that's aggressive buying at the end of the trend. So it's like smart money versus dumb money. I mean, I don't know what the hell is going to happen, but pretty interesting, right? So your breakaway gap, and then this is what we would call your exhaustion gap. All right. What else we got here? Communication services, industrials. Let's take a look at them. This is communication services. This is the home of Facebook and Google. All right. Kind of decent action here, right? I mean, we had really aggressive buying, but now we're consolidating, and that's what you want. If you go up too fast, you're going to come back real fast. It's like the market's like this, like a like like a rubber band. Here's our industrial sector. Not much to say here. And then some of these other sectors. This has really been kind of interesting, actually. There's been this kind of most of the time, oil and energy stocks kind of trade. They're kind of correlated, but that has not been the case. Oil has been going down while energy stocks have been going up. So this has to do with the election. But in general, the energy stocks, assuming they're oil based, follow oil. But that hasn't been the case over the last couple of months. They've been going in the opposite directions. Anyway, notice how oil found support at the same level that was support before. I mean, this goes back almost 2 years here, a year and a half. And it's very common for markets to find support at levels that were support before, just like they find resistance at levels that were resistance before. And this is because the people sold over here, and they're like, once the price rallies, they're like, this sucks. I shouldn't have sold. If it gets back to my level, I'm going to buy my oil back. So remorseful sellers placing buy orders can make support become support again. And then a lot of times when you get to support, the buyers who created the support, or the investors and traders who create the support with their buy orders, they start to worry that they're going to get outbid. They know sellers are going to go to whoever is willing to pay the highest price. So what do? They increase the price they're willing to pay. Others see that and they do the same thing. And you get this like snowball effect, which is why we rally off of support a lot of times, right? You got to understand the psychology if you want to do this. You get support at former support levels because of what? Psychology, seller's remorse. You rally off of support because of why? Buyer anxiety, I would call it. All right. I mean, it's amazing how you can look at charts from like 150 years ago and see the exact same patterns. Here's utilities, right? Kind of found support at a level that was support before. All right, everyone. I hope this helps. Always good to know what's going on in these various sectors. There's materials. Different sectors are in the driver's seat at different times. So part of trading is knowing what's important to watch, because what's important to watch today may not be important to watch next week, and so forth and so on. And you get what I'm saying. All right. Thanks, everyone. See you soon.